The following is a presentation of TFNN. The Morning Market Kickoff with your host, Tommy O'Brien. Now, Tommy O'Brien.
Good Thursday morning, everybody. I'm Tommy O'Brien, coming to you live from TFNN just after 9 a.m. Eastern Time. We got about 24 minutes to go until the start of trading. We have PPI, Producer Price Index, out this morning, a little bit hot. Not too surprising on the heels of the CPI yesterday, but PPI comes in 0.4% on the month. They were expecting 3.3% on a yearly basis. 3.5 was the number there. Above expectations as well. But guess what? The market actually trades higher on that news. You see the volatility in the NASDAQ 100. We're up by 0.3%, or 67 points in the positive. You back it up to encapsulate yesterday, actually above where we came into that CPI number in the NASDAQ 100. S&P is just under that level from yesterday, but this morning we're positive by 8 points, or 0.1%. Dow up by 79 points, or 0.2%, 44,500. Bitcoin a little bit lower at 96,000 right now. Crude pulling back. How about that pullback the last couple days? Approaching a 69 handle to 70.22 this morning. We're trading at 70.55. Gold trading higher yet again, up by $8 at 29.36. And we get to the all-important notes and bonds. Higher price, lower yield on the heels of that. Now, we got jobless claims as well this morning. That number coming in, I think it was 213,000. We'll pull that one up there. Let me see. I thought I had it up here. We'll talk about that in a moment, but you have jobless claims coming in. And nonetheless, we got the 10-year right now. I want to say 4.6, but we've pulled back. Yeah, 4.56. So, I was writing the newsletter 45 minutes ago, up early this morning. And prior to this move, we were sitting at about 4.6. Now we're sitting at 4.57 to round it. But the dollar, how about the euro action? Right? Dollar up to 108.5 on the heels of the CPI yesterday. And then you give up a full point to 107.5. We're at 107.80 right now. Now, the dollar, how about that move in the euro-US dollar, right? Strengthens to 104. We've given back some of it. You have peace talks going to be occurring between Ukraine, Russia, maybe a little bit of tensions easing in Europe, allows the Europe to strengthen. But guess what? You give it all back. We're just back to where we were on Wednesday, almost where we were on Tuesday. You take a look at the euro-US dollar. Maybe you're capitulating a bit since November 22nd when you made that move lower, but we have not caught a bid in the euro-US dollar yet. And I will say the same thing, that yes, we've pulled back a bit to 107.83, okay? But we need a decisive break if you're going to really, you go back to the week of November 18th. We've been trading around 108 since we got to that price level then. And it's remarkable that you're talking about that was almost 90 days ago that we've been adjusting to 108. You're chopping around 108 yet again, and we'll see if we can break away. But nonetheless, today we got a little bit of dollar weakness, even with yields pushing almost 4.6%. Quite a number. Okay, we get over to the PPI numbers at 8:30. And yeah, PPI 0.4% from a month earlier, following an upwardly revised 0.5% increase in December. So they upwardly revised December. You come in at 0.4. The market was looking 0.3. Year over year, 3.5% is the number. I think they were expecting 3.3 or 3.4. Core PPI climbed 0.3% and 3.6% from January of last year. Producer price indexes, core, rising almost 4% from January of last year. Goods prices increased 0.6%. It's a hot number, to be expected to a degree. And then, there are unemployment claims, 213,000, pretty much in line with the healthy economy. Continuing claims declined. So, We have unemployment at 4.0%. We have continuing claims declining. We have initial claims just barely over 200,000. You compare it to the size of the workforce, 200,000 is just a healthy churn. And we have inflation hot. You translate that to the Fed, and yeah, you're going to go out in terms of when the market's going to expect cuts. We take a look. Because, boy, they're going to be patient, but how patient are they going to be if the inflation persists to this degree? Now, they're talking about an outlier risk that you have a cut, and I'd say that outlier risk is only that you get a shock in the data somehow, because we just got January data, right? We got January CPI, we got January PPI, we got January jobs number already out, which shows wages, jobs, healthy economy, etc. We do get February before we get March. But you got to go all the way out to December to where you finally see a dramatic increase in where the market is pricing in, because you're only 11 points above for a October cut, and September is when you actually rise above. Okay, so somewhere over the September, October, December meetings, the market's pricing in one cut. By the end of the year, about a 1 in 4 chance that you get more than one cut, right? They're either at where they are right now, or they're one cut away, and yeah, I guess 1 out of 3 when you combine down the take. But what always amazes me, to pay attention, there's nothing to the right side of this curve, and I feel like there should be some probabilities to the right side of this curve with the inflation data that we have going on the line. We're at 4.25%, 4.5% right now, but inflation's not coming back down. We're higher for longer, and maybe the Fed's just going to hold out where they are, but can they hold out where they are if those inflation numbers persist? That's kind of the conundrum that you may find yourself in. And if this market begins to price in any possibility that hikes are actually back on the table, that would be a risk that you want to make sure that you're trying to categorize, because it's a big one. Amazon shares to 228 from 242 on a weekly. We go back to a daily. We're trading right now flat on the session at about 228. And yeah, a little bit of a pullback. We're just back to where we traded at the end of 2024. We traded up to a high of about 233. We're trading at 228.93 right now for Amazon. You jump over to Apple shares this morning. Quite the day for Apple yesterday and Tuesday. You're up to 237 from 236, slightly in the positive. Tesla shares, quite a day for them as well. Today, you're going to open up, another $10. You basically get back the slide you had towards the end of the session yesterday on Tesla shares. Excuse me. Google's a bit higher. NVIDIA trading at 131. Jump over to Intel shares. Yeah, they're on a tear this week, man. Last week we're at 19, we're at 23. You're up $4 almost from where you were trading last Friday. Remarkable. All right, you jump over to gold. So we'll take a look at some gold equities when we get back after this first break. And there it is in writing. Gold strong like bull, making a run for $33.50, man. That's the price. Put it on your charts, okay? And gold's going to have some volatility. Longer term, though, it seems like gold holds up well when the dollar strengthens. And when the dollar weakens, it takes an opportunity to make some hay. And then the dollar will strengthen and gold will chop around. And I think there's a real, the underlying, we're trading towards 33.50, which will be a 1-to-1 from the move that began last February. Stay tuned, folks. If you're looking for potential trading setups in the stock market, then Rocket Equities and Options Report is a newsletter you should try. Tommy O'Brien delivers options and equity trades when the markets present them, using a combination of fundamentals and technicals. Sign up for Rocket Equities and Options Report today with a 30-day money-back guarantee, so you have nothing to risk. For all the details and to start your subscription today, visit the front page of TFNN.com. TFNN, educating investors.
In the world of trading, only a few names stand out like Larry Pesavento. A pro's pro with over 50 years of experience, Larry has seen it all. A former Chicago Mercantile Exchange member, Larry has authored 10 books and trained over 1,000 traders with his unmatched expertise. Introducing Fibonacci 24/7, Larry Pesavento's daily trading service that turns the complexity of markets into opportunities. Published every Sunday, receive a comprehensive report packed with detailed commentary, charts, and videos that illuminate the patterns shaping the markets, with updates throughout the week exclusively for subscribers. Whether through charts or videos, Larry's analysis is your roadmap to navigating the markets. You can sign up now at TFNN.com for just $97. And with all TFNN newsletters backed by a 30-day money-back guarantee, you have nothing to risk. For all the details, visit TFNN.com. You'll find Fibonacci 24/7 right under the newsletters tab.
Building wealth trading in the stock market seems impossible to most people. They think it's too volatile and risky. Most people aren't going to take the time to educate themselves on how to do it right. But you're not most people, are you? At TFNN, you'll get the guidance you need to refine your strategies and techniques to invest like a pro. Because you'll be a pro. All TFNN subscriptions, books, software, and courses are available at TFNN.com. And I'm even going to tell you how to get them for less. Use TFNN's Tiger Dollars and you'll get up to a 20% bonus on your purchase. And once you apply them to your account, Tiger Dollars are automatically used for all future or recurring charges. Tiger Dollars also never expire, are fully transferable, and are a great way to add savings to your newsletters or services. Become the investor you were born to be at TFNN.com. TFNN, educating investors.
TFNN has launched the Tiger's Den. Hosted at Discord, TFNN has been educating traders for more than 20 years with live programming hosted by a variety of professional traders during market hours. The Tiger's Den, available to all tigers and tigresses for just $1 for the year. There's no catch or added costs when you join our community of traders. Sign up today and become a part of this educational community of traders. Just visit the front page of TFNN.com.
This portion of the Morning Market Kickoff is brought to you by Direxion's daily leveraged and inverse ETFs. Whether you're a bull or a bear, you choose the direction. Visit Direxion.com. Investing in the funds involves significant risk and should only be utilized by investors who understand the impact of leverage and actively monitor their portfolio. They are not designed to track the underlying index or security for more than a day. Before investing, carefully consider a fund's investment objective, risk, charges, and expenses contained in the prospectus available at Direxion.com. Read carefully. Distributor Foreside Fund Services, LLC. Welcome back, folks. We got the markets in positive territory. Back to gold for a moment. So gold on a weekly basis, okay? This one-to-one we're talking about here begins at 2,000. Nice even price number, 2,000 on the dot. You trade higher to 2,800 in a one-way trip, straight line move. You pull back just below 2,600, about 2,550, and then you're going to make another $800 move. It would be one-to-one, A to B, C to D. Your B point here, about 2,800. And, you know, that B point, okay, you're looking at 932,000 contracts. You did pull back with a little bit of volume here. It's the one thing that sticks out on this gold contract, right? You trade higher, you pull back over the election, the weeks of November 4th, the weeks of November 11th. Now remember, that's when you got some tremendous dollar strengthening, okay? And I think this case is worth it to go over for a few seconds. Remember, you come into November 4th with the dollar at 104. Okay, we were at 100 in October, right? You come into November, Trump wins, dollar strengthens, you shoot from 104 to 108, and that's the area that we've been in since then. You make that move all at once, right? November 4th to November 18th in the dollar index, you hit 108, and I'm making this point because this alludes to the strength in gold. You go back to the gold contract, you correlate that. That was your dollar strengthening, okay? The dollar strengthened in dramatic fashion, and it did hit gold. It hit gold to the tune of $200. But guess what? What did I just say? What I just said was the dollar is right where you were right then, and since then, right, what's happened? You've had the gold contract strengthen to the tune of almost $300. There's going to be a little bit of wind at the back if you get dollar weakness, and even in the face of dollar strength and consolidation, you can see We were trading at 27.50 when the dollar was at 103. Okay. We were at 2,700 when the dollar was at 100. And I think it speaks to the legs that you can have trading up to a price point of at least 3,000 right now and potentially 33.50. We had a great conversation with our man Teddy Kegstad yesterday talking about euro parity. And yeah, we have some action today in the euro. And yes, it would probably be a good thing to ease some tensions. Ukraine, Russia, peace talks. Is it going to save the euro from the dollar? I don't know if that's the case. I don't think it is. All right, let's jump around to some equities with action today. And how about Robinhood, man? We'll get to app love in a moment, okay? AI advertising, my goodness. But how about Robinhood, my goodness, right? Comes out with their earnings. You're higher by about $7. Yeah, from $55.91 to $62.83. And, you know, crypto is a big part of what they have going on in terms of Robinhood. The numbers that they're doing in crypto are fantastic. And crypto's having a moment. And I bring that up because when this thing traded IPO in late 2021, I can't recall the exact specifics. Maybe I'll try and find them during the next break. They were making so much money off of meme coins in particular. Not even Bitcoin, not even the leaders of crypto. Meme coins like Dogecoin and all of that. And it's back. And they're getting rewarded. And you're going to open at $62. And the only thing above it is you're looking at where they went IPO for a very short period of time. So strong numbers, man. How about $1 billion? Yeah. They were estimating about 944 million. You come in at $1 billion. You know, I feel like it's going to be difficult to maintain the type of growth that they have going on with some of the meme coins, the crypto coins. They're having a moment, just like they had a moment when this thing escalated prior. And the cyclical nature of that, when Bitcoin could potentially have a pullback, is something that I don't think gets factored in. But hey, investors on the other side of that trade, from $6, even from, $8 at the end of 2023, from $14 August of last year, and Robinhood trading at $62. And guess what? You're going to take in over $1 billion. Big numbers, man. So MGM, they're going to pop higher. We go back to the short-term time frame. Out with their numbers last night, strong numbers. You trade from 34 to 38.20. MGM, $4.35 billion in revenue. The market was looking for 4.27. They beat across the board, and you trade higher. Yeah, look at this equity, though, man. It is remarkable, some of these pullbacks you had. So we're going to open at about the 50% line, which is a little bit of an area. That's a monthly. Let's go back to a weekly. Yeah, look at this huge volume bar you got from 6 months ago. And the volume bar from 3 months ago. This is going to face some resistance on the way up, man. Look at these bars, right? Jeez. I mean, you got to go back to November of 2023 where you go through an earnings event with MGM and you're happy. Look at this. A year ago, you rip lower. You trade back, you rip lower. You get back up to highs, and then in July, you rip lower, followed by the earnings event in July of 2024, and you do it again in October. And so we're going to open kind of in no man's land. You're going to be in the middle of the bar from October, where they had their earnings 3 months ago, and you're going to be in the middle of the same bar from 6 months ago. You take a look at the NASDAQ, the volume on these. I mean, we had some decent volume yesterday. Shouldn't be surprising with the type of two-way action we got. I mean, you look at that NASDAQ 100 bar, how about 350 points from low to high in both directions? Not often do you get, folks, a 350-point acceleration in both directions for 1.5%. And we're getting these rallies and pullbacks across the board. I put in the newsletter this morning. No matter what you're trading in this market, you really want to try and keep your stops tight. Let your profits run to a degree. Take some profits off the table when you can, because you're going to get moves in both directions because of the unknowns. And one of those unknowns, as we tee it up, are we going to get some reciprocal tariffs? And this is where Trump, he gets it done when there's a consensus on something that reciprocal tariffs probably should have been discussed more so. Seems like people are on board to a certain degree versus punitive tariffs, right? And using it's something that the conversation shifts, but it could have an outsized impact, to put it lightly. No details on the size and the scope, but guess what? 1 p.m. today. Get ready for it. So we'll see how the market reacts coming into that. Yeah. But today's the big one. Today's the big one, folks. Reciprocal tariffs. We got a hot PPI number. We got markets shaking it off, positive territory. Stay tuned, folks. We're coming back for the open.
This year has already been a wild ride for the market. We started off heavily in the red, reversed back to all-time highs, and we now have a trade war looming. Trying to play this chop as an individual trader leads to death by 1,000 cuts. Where does this market go next? Should I add to this position or cut my losses? Where is the next opportunity? Tariffs, trade wars, analysis paralysis. Don't become a victim of this intense market. Instead, join Larry Pesavento over the second and fourth Friday of every month for 3 hours of live trading. Larry has been through many markets just like this one, and the insight he provides is invaluable. The events for this month are February 14th and 21st, 9 a.m. to noon Eastern Time. Get in here and let's start trading. TFNN, educating investors.
If you spend any time online researching trading techniques on how to begin your trading journey, you've no doubt come across many folks who push Forex trading as a way to make big money quickly. Unfortunately, there are equally as many stories of these so-called Forex professionals just looking to make a quick buck off aspiring traders without actually teaching the ins and outs of the Forex market. This is what sets Teddy Keckstack's The Tiger Forex Report off the riffraff. Every Monday, former Chicago Mercantile Exchange member and author Teddy Keckstack releases his Tiger Forex Report newsletter, where he dives into the complex world of Forex and takes time to actually teach you his methods that have made him so successful in the fast-paced and rewarding world of Forex trading. Furthermore, all subscribers receive access to archived live streams of Teddy's, where he provides university-level education to help you in Forex trading. All first-time subscribers receive a 30-day money-back guarantee. So what are you waiting for? Forex awaits.
Steve Rhodes started his trading career as a student almost 20 years ago, and the student has now become the master. Steve won the prestigious Timer of the Year award in 2018 and barely missed that mark again in 2019, finishing at number 2 for the year. An amazing accomplishment. Steve Rhodes is committed to sharing his techniques and knowledge with anyone who wants to learn, and he shares his vast amount of trading knowledge every day in his Mastering Probability newsletter. Steve's award-winning newsletter, Mastering Probability, is delivered every trading day with updates throughout the afternoon. Sign up for Steve's market newsletter, Mastering Probability, and you'll receive access to 7 of Steve's educational webinars absolutely free. At TFNN, all our newsletters come with a 30-day money-back guarantee, so you have absolutely nothing to worry about. Visit TFNN.com and try Mastering Probability 30 days risk-free today. TFNN, educating investors.
Don't forget, you can listen to TFNN live on your mobile device 24 hours per day. Go to TFNN.com, then hit Watch Tiger TV. That's TFNN.com, then hit Watch Tiger TV.
Welcome back, folks. We got markets open. Markets in the green. S&P is up by about 10 points right now, about 0.2% in the positive, 6,082. You can see, though, kind of bumping against the area that we've been shopping at in terms of a higher range. We have not touched 6,100 yet. We're 17 in terms of this week's trading. Haven't touched that level, bumping up against it. You see that's right where we rolled over. Overnight, also where we were yesterday. We made it up in prior to that CPI number yesterday, almost right to 6,100. 6,098 on the dot. And yeah, those Robinhood numbers, to pull them up exactly, how about crypto revenue? 700% rise. Okay? Those are the numbers you want to be a little bit careful of. Because I was looking to try and find the revenue, and here it is, okay? This is the type of articles when they're, and I'm going to correlate it to the dates. Dogecoin was 62% of their crypto revenue in the second quarter of 2021, okay? Now this is August 2021. And I'm not saying it's going to happen, but it's something that I'm looking at, okay? And aware of, at least if I'm trading this. And here's where the stock was trading at in August of 2021, okay? That's the higher area. Because I remember thinking this, saying, man, this can't be real, man, right? They're not gonna make, you know, you're not gonna have a trading outfit that's making all their money off of people trading Dogecoin, right? Well, Dogecoin is back, as we know, folks. And guess what? Robinhood is back too. So this is from August of 2021. Crypto made up over 50% of their revenue, and of that revenue, 62% was Doge. So that means that Doge was over a quarter of their revenue, right? If crypto's 50% and Doge is more than 50% of that, then you're talking about almost 30% of their revenue. And 60% of their funds traded in crypto. Now that's 2021, okay? Revenue from crypto was $233 million at the time, and they were making so much of that on Doge, okay? Now, you go over to Robinhood right now, and you have crypto revenue at $358 million. Okay? That's not a dramatic amount of growth for an equity like Robinhood. When I just showed you, it was at 200-something million in 2021 when it was all crazed. That was 4 years ago almost. 4 years ago. Okay? Anyway, for what it's worth, those numbers, when you start talking about doing all your business on crypto exposure, you add in some volatility, and we've seen it play out before. And they did, but they're doing it in the 700% rise in crypto. And a lot of times you see some real spikes, and guess what? You're never going to see a spike like this one when you literally have government agencies run by the richest men in the world named after meme coins that are driving their revenue. Yeah. So again, how do you trade that? I trade it with a tight stop if I can. You know, you come into those earnings events, you got exposure, that's one thing, but I trade it with a tight stop because you're going to get volatility. It's been a straight trip up over the last 3 months. But man, for what it's worth. And we jump over to Bitcoin. 96,020. You jump over to strategy. MicroStrategy becoming strategy, down by 1.2% right now to 322. Coming into the lows that we had to end the year. 317 was the low, 285 was the low. 317 is the high of that bar. Look at Ethereum, right? Not all coins created equally. They were supposed to be the second coming. Not so much. 2652. Just shows you how quickly things can change, folks. And don't think that can't happen with Bitcoin. You know, you're willing to risk everything you have in Bitcoin, that's one thing, but do not think that for some reason another coin could not come out of the woodwork and replace Bitcoin. It would be difficult to do. I agree, but there's nothing saying that it can't happen when they're all basically the same thing. And Bitcoin's the original, but there's nothing to say. All right, what else we got going on in this market? Boy, app loving, right? My goodness, they were talking about this in the den last night. I did some research on this stock last night because, my goodness, man. How about that? 37% to the upside. Yeah. $1.73 on revenue. They were only supposed to make $1.24. So what, they beat on revenue by almost 40%. On earnings by 40%. Revenue of $1.37 billion. They were only supposed to take in $1.26. But it was gangbusters across the board. And yeah, that's a weekly. But really, that's a daily. And it's pretty remarkable when you crush it 3 months ago and you crush it again. And over the period of 90 days, you trade from 160 to 525. And this company now, you're talking about a valuation, $175 billion. How about that, man? Now, you know what's wild is, right? You talk about growth companies, okay? The share price is $521 right now. How much did they make in the last 90 days? $1.73. You multiply that times 4, you get $7 of earnings per share annually. And you're trading at 520. Right? Look at that chart, man. And AI and apps. That's what they do. They're a software company, and they use AI to figure out the best apps out there. And it would make sense that that's a stock that's accelerating. On the flip side of that, check out Kraft Heinz, man. They get a downgrade to underperform from Bank of America and to neutral from Citi. Disappointing fourth quarter revenue was the number there, and they're trading lower yet again. Off another 1.8%. Man, what's going on? Whew, look at this one, man. You're coming in to test these lows at $20, man. No, excuse me. The low of this bar, $23.36. Yeah, because you got a range from about $23.30 to $24. The lows of 2019 out there at about $25, $24.86. Seems like that's a path you're on for Kraft Heinz. What are their brands? Let's see what their brands are. Their beloved global brands. They are not faring as they need to. Philadelphia cream cheese, Velveeta, mac and cheese. We got that in the house sometimes. About as processed as you can get, but occasionally. Grey Poupon, Maxwell, Lunchables. Didn't Lunchables get just recently found to have iron or lead or something in them? Don't quote me on that one. Oscar Mayer, Ore-Ida, and of course Kraft and Heinz. They got some issues. That is an ugly looking chart in the short term, man. Breaking new lows. Kraft Heinz down another 1.5. This market just rolled over, though. S&Ps go red. We're going to take a look at it. We'll be right back.
Many trading newsletters attempt to focus on a narrow set of equities or commodities. While this works for some, it oftentimes misses many opportunities that possess huge gain potential. But how is an independent trader supposed to scan the entire market looking for these hidden opportunities? One simple answer: the opening call newsletter. Basil Chapman, developer of the Chapman Wave trading methodology, has been trading the markets for longer than most trading influencers have been alive. And over that time, he has honed his methodology in order to accurately call movements in a wide range of equities, from semiconductors to uranium to key indices and so much more. Basil is old school, taking the time to educate the trader while also giving his insights into key indices, selective stocks, and more. Opening call subscribers also receive access to dozens of educational live streams that can be accessed at any time for your edification. All first-time subscribers receive a 30-day money-back guarantee. So ignore the pop trading influencers and start learning time-tested technical analysis.
For traders who crave risk, Direxion's daily leveraged and inverse ETFs provide opportunities to magnify short-term perspectives with up to 3 times a daily leverage, utilize bull and bear funds from both sides of the trade, and trade through rapidly changing markets. These are highly leveraged ETFs with daily resetting designed for short-term trading, not long-term investing. Whether you're a bull or a bear, you choose the Direxion. For up-to-date pricing and performance, go to Direxion.com. Investing in the funds involves significant risk and should only be utilized by investors who understand the impact of leverage and actively monitor their portfolio. They are not designed to track the underlying index or security for more than a day. Before investing, carefully consider a fund's investment objective, risk, charges, and expenses contained in the prospectus available at Direxion.com. Read carefully. Distributor Foresight Fund Services, LLC. Are you ready to take charge of your financial future? TFNN is your gateway to the world of trading and investing. Whether you're starting out or scaling up, TFNN empowers traders and investors of all skill levels with top-notch investing systems, strategies, and techniques. It's time to protect and grow your money with insight you can trust. Join us live Monday through Friday during market hours for exclusive content that moves with the markets. At TFNN, we bring the trading floor to you. Our seasoned hosts are here to answer your calls and questions live on the air. Check out the Tiger's Den for just $1 and follow us on YouTube and become part of our vibrant community. And remember, at TFNN, we're so confident in the value we provide that we offer a 30-day money-back guarantee on all new premium newsletter subscriptions and services. You have absolutely nothing to risk, so why wait? Tune in live to Tiger TV and transform your trading journey. Because when you know better, you invest better. Join us and experience the difference today. TFNN, educating investors.
This program is brought to you by Vista Gold, traded on the NYSE American and TSX under the symbol VGZ.
Welcome back, folks. We got a little bit of a pullback on the open. You see that bar on the S&P, about 935. You rip lower, 15 points just like that, and we're flirting with basically flat in the S&P's NASDAQ 100, positive by 43, but you see the volatility. And this is kind of what I'm talking about when I'm talking about the trades and keeping your stops tight. You want to go long this market? You want to go short this market? You know, yeah, you got to be right. You got to pick your point. But look at the acceleration, right? You buy the open, boom, you're right. Somehow, if you catch the falling, knife, but you just got 100 points up and 100 points down, just like that in the NASDAQ in the first 10 minutes of trading for the day. Remarkable. Now, talking those PPI numbers, okay, we take a look at the front page of Bloomberg right now, wholesale inflation, and these are the numbers for the last 6 months. You add up these 6 numbers, folks, okay? This is PPI. The Fed prefers the PCE. The CPI is the consumer portion of that. The PPI is the producer, one label removed. Okay, so it's not the ideal Fed's preferred inflation gauge, but I added up these 6 numbers, and that's 2%. So the PPI over the last 6 months is 2%. They're supposed to be at 2% overall. Now, it doesn't necessarily translate to consumer prices, which is what the Fed is most cares about. But we saw what those numbers were yesterday, right? And I just found it interesting. Last 6 numbers, 0.4, 0.5, revised upward for December, 0.4, 2, 2, and 3, those numbers, 2% on the dot. Yeah, they were talking a lot about eggs this morning on Bloomberg. And yeah, this went out last night. John Authors. Yeah, that's inflation. Yeah, I had read that one as well. They were talking 15%, the number for eggs, in terms of the cost going up. And yeah. The problem is, man, you got a bird flu, you wipe out birds. It's a simple case of supply and demand, folks. Economics, there's a reason why economics, supply and demand. The supply and demand curve, it's real, okay? I remember learning about it in high school. It's the fundamentals of how business operates, right? A demand for something creates an incentive to pay more for a price if there's constant demand. And supply eliminates the need for some of that demand. Nonetheless. All right, we checked back in on gold this morning. Gold trading at $29.42. We checked back in on yields. Yeah, higher price, lower yield coming at you off the heels of that. We almost got it all back from yesterday. Look at this, man. This market cannot figure out what it wants to do. We get the yields back to 4.55. I was right in the newsletter today. We're at 4.6. By the time I'm off the air, we might be at 4.5. We're at 4.55 right now. We got higher price, lower yields. You jump over to the dollar, all the way to 107.5 overnight. All right, what else we got pulled up in this market? How about Crocs? Yeah. No, there it is. Yeah. Now, you go a little bit longer term. That's your daily. Pretty remarkable. You're just almost back to where you were January 30th, right? You trade lower into those numbers. And we pull it over from the journal. Hey, dude. And do they have a picture of them in here? No, they don't. But no, I remember when they bought this brand. Revenue at almost $1 billion. The market was looking for a revenue of $960. Earnings $2.52 a share. The market was looking for $2.26. The Crocs brand is expected to be flat to down 1% in the current quarter, while Hey Dude is expected to be down 14 to 16%. What is going on there? With the lift from Hey Dude, and they're going to be down that much? How do you buy a brand that's doing that? I guess they knew that was coming, and maybe they just beat expectations. Maybe somebody in the den or the YouTube Tigers den can help me out on Crocs. And I know you see the chart, okay, from 165 down to 88. You bump up to 104, and I guess they beat on some metrics. Well, you're telling me they buy that brand and all they're doing is shrinking on Hey Dude? Why are you buying a brand that's shrinking at all? Why would you buy anything that's shrinking? I guess if you get some cohesive nature, you buy a shrinking company on the cheap, but I don't think that's what they did with Hey Dude. Okay, so we got Chairman Powell the last 2 days, and we have Trump coming up at 1 p.m. Eastern time today. Going to be interesting to see. I imagine this market, we get a little bit of volatility, and then we potentially trail into that 1 p.m. hour. But as I said, no matter what you're trading, try and keep those stops tight. You know, don't be afraid of taking some losses in this market when you know that there's 100-point pullbacks and accelerations. I mean, did we just do it again, right? Almost 80 points up. Jump over the VIX right now. 1577 under the 16 price tag. VIX, very little volatility in this market as, yeah, earnings just continuing to drive this market higher. And earnings will do it, folks. Taking a look at the yen. We weakened to 154 yesterday on dollar strength, and as the dollar's pulled back a bit, you get the yen trading at 153.43. We check back in on the euro US dollar. Yeah, chopping around near 104 right now. Let's take a look at copper. So copper's getting quite an acceleration here. We bounced from $4 at the beginning of the year, and we're coming up to an area, though, and we got a lot in play when you're talking about metal tariffs everywhere, right? Fundamentally, a lot in play, but you're coming up to quite a technical area for copper. Copper makes a high of 479 back in September 24. We just trade up to 475. We're trading at 471 from $4 only 6 weeks ago. And, you know, you look at equities like Freeport-McMoRan, copper and gold. Look at that chart, folks. Now, what I will say is interesting. Could be breaking out of that channel line to the upside there. Keep your eye on Freeport-McMoRan. His point is, it doesn't look like copper is going to carry these equities higher so far. Southern Copper, okay, another equity. Look at these copper equities. Southern Copper is chopping around on this 11 million share bar you did back in March of last year. but you see charts of copper, okay? So I talk about this in the gold report. Not reflected in the copper equities themselves. You got gold at all-time highs. This is a gold and copper company, and they can't catch a bid right now. Same with Southern. We'll be right back, folks.
Many trading newsletters attempt to focus on a narrow set of equities or commodities. While this works for some, it oftentimes misses many opportunities that possess huge gain potential. But how is an independent trader supposed to scan the entire market looking for these hidden opportunities? One simple answer: the opening call newsletter. Basil Chapman, developer of the Chapman Wave trading methodology, has been trading the markets for longer than most trading influencers have been alive. And over that time, he has honed his methodology in order to accurately call movements in a wide range of equities, from semiconductors to uranium to key indices and so much more. Basil is old school, taking the time to educate the trader while also giving his insights into key indices, selective stocks, and more. Opening call subscribers also receive access to dozens of educational live streams that can be accessed at any time for your edification. All first-time subscribers receive a 30-day money-back guarantee. So ignore the pop trading influencers and start learning time-tested technical analysis.
Steve Rhodes started his trading career as a student almost 20 years ago, and the student has now become the master. Steve won the prestigious Timer of the Year award in 2018 and barely missed that mark again in 2019, finishing at number 2 for the year. An amazing accomplishment. Steve Rhodes is committed to sharing his techniques and knowledge with anyone who wants to learn, and he shares his vast amount of trading knowledge every day in his Mastering Probability newsletter. Steve's award-winning newsletter, Mastering Probability, is delivered every trading day with updates throughout the afternoon. Sign up for Steve's market newsletter, Mastering Probability, and you'll receive access to 7 of Steve's educational webinars absolutely free. At TFNN, all our newsletters come with a 30-day money-back guarantee, so you have absolutely nothing to worry about. Visit TFNN.com and try Mastering Probability 30 days risk-free today. TFNN, educating investors.
The reality is that navigating financial markets can be risky. Markets can be chaotic and difficult to understand. Having the latest market advice can help you turn this chaos into a key for creating winning trades. At TFNN, we understand that it can be hard to find reliable market news. That's why each of our market experts offers their very own market newsletter, a must-have tool for every trader out there striving to find an edge in today's markets. TFNN newsletters cover every aspect of the markets so you can analyze the market before you trade. Try any of our great newsletters risk-free with our 30-day money-back guarantee. Just visit the Newsletters tab on the front page of TFNN.com. TFNN, educating investors.
Don't forget, you can listen to TFNN live on your mobile device 24 hours per day. Go to TFNN.com, then hit Watch Tiger TV. That's TFNN.com, then hit Watch Tiger TV.
Welcome back, folks. Markets in positive territory with the S&P's up by 7 right now. As I mentioned, press conference with the president. He's got to take the limelight back from Elon. Pretty amazing, just in general. To see the president like that with Elon leading the show in the Oval Office, interesting to see. The word interesting, Elon loves to do this. I pull up his Twitter feed sometimes, all right, and he just retweets things with the word interesting, right? It's almost an SNL skit. Interesting can mean so many things, folks. Nonetheless, interesting. S&P's, NASDAQ, Dow, all in positive territory right now. You jump over to some of the Magnificent Seven. How about the run Meta's been on, man? I think I heard, was it 17 straight days in positive territory? You got some red bars in there, but those are only red bars because you opened higher. Pretty sure we got consecutive closes in higher territory going back to January 21st. You're negative by $1.68 right now. You're trading up at $723. And I tell you what, I was reading about, I think this, let me see if this is the article potentially. It was a couple days ago. I think it is. What struck me is, low performers. And they're going to rehire people initially. This is just like righting the ship. And Zuckerberg, man, so they're going to cut 5% of the workforce for people who aren't meeting expectations. And then they're going to rehire. Yeah. The cuts will create a headcount for the company to hire the strongest talent and rehire out there as they recoil a bit. And not easy to do as a leader, I'm sure. But Zuck is fired up, man. And right now, you probably are. Running one of these tech companies, I imagine the shift in talent you need, things are changing dramatically, right? He needs to reset where some of those resources are allocated. Meta shares. All right, NASDAQ up 110. Stay tuned, folks. Basil's out today. We're going to replay this show right now. After that, we got live Steve Rhodes, Larry Pesavento, Jacob Shub. Have a great day, folks. We'll see you tomorrow. Have a great one, folks.